It's an hour before the open on Thursday, October 21st. Hello, traders. Let's take a look at my last pick. It came out before the open Tuesday. I'm also recording this before the open on Thursday. In that video, I showed you Microsoft. I really like it. You can see how this was the open on Tuesday. That would be your first opportunity to buy the stock. And you can see it's pretty much where that opening price was, which is not fantastic, but keep in mind the strategy that I suggested to you was to sell an at the money or slightly out of the money bullish put spread on the notion that the stock would grind higher into its earnings announcement. We have a search, I have a database, I track how stocks have performed once they get inside that 2-week window before the earnings announcement date. These stocks have rallied more than 75% over the course of the last 3 years once they get inside that window. So we're going to take a look at a couple of other picks that are also shaping up for this strategy. But first, we need to step back and we need to take a look at what the market's doing because that sets the tone for everything that we do. Let's go into the daily chart, start with a longer term view. Downward sloping trend line, breach to the upside, beautiful. That was a very powerful candle last week. You can see how it closed right at the 50-day moving average. Will we retreat? Will we go higher? Boom. Follow through the next day with a gap higher. The next day, we open lower on the low of the day. Don't even get down to the 50-day moving average, and we rally the entire day. That is a bullish engulfing candle. Very, very bullish. This told me that we were going higher. Gap up, gap up. So now what? Now what happens? Gee, Pete, I don't know. We're getting pretty close to this all-time high. Yes, we are. Click GTC, double click on that alert line. There's your all-time high. We are within striking distance of that all-time high. That does make me a little bit nervous. I'm going to go into the 5-minute chart. And we'll take a look at the price action that we've had the last couple of days. There are signs of selling pressure. I'm going to go back because the first sign that I saw was actually on Tuesday. So market rallies up. This is all beautiful, but then it compresses. This is a sign of resistance. Plus, the market's had a really nice rally here, had a great rally the day before. So it tells me that there is resistance building here. And then wham! We get these 3 long red candles right off of the high. That's a little concerning. Not to worry. We rally back up. Nice long green candles stacked. Long green candle here, breaking through the high of the day. Could we be off to the races? This sure looks good. Big long red candle. That is an engulfing candle. That is a warning sign. That's a red flag that sellers are starting to get more aggressive at this level. You can see another red candle here. We do recover and we do gap higher yesterday, so that was all fine. But then as the day unfolded yesterday, you can also see really nice stacked green candles, but those gains are pretty easily erased. Lower high, double top, compression, wham, we get another series of selling. So the easy money has been made. The headwinds are going to be blowing. We've got earnings season cranking up right now. So I think traders, for the most part, are going to be watching to see how these big tech names come out. I personally think those earnings are going to be excellent. Microsoft, Facebook, Amazon, Google, Microsoft, those are all going to be good earnings. They are not nearly as impacted by higher raw material costs, supply outages, supply shortages, higher labor costs as the other 495 companies in the S&P 500. Mind you, those 5 big tech names, they comprise almost 25%, a quarter of the S&P 500 market cap. So they are critically important. Those reactions are critically important. I think the earnings are going to be great, but with stocks trading at a forward PE of about 23, we haven't seen those levels since the 2000 tech bubble. So know that valuations are very, very stretched. Know that we're starting to see some signs of selling pressure near the high. Does this mean that I'm going to go out and buy puts? No, it does not. There's nothing to suggest that the market is going to roll over and play dead. Typically, the market rallies into year end. If we don't see a big year-end rally, however, if we can't get through the high of the year, substantially through the high of the year, I'm going to view that as a warning sign for 2022. So keep that in mind. We do have headwinds. We've got some potential credit issues in China. We've got China's growth slowing. We have the TLT that we need to keep an eye on. TLT has been moving lower in a pretty steady fashion. We're going to go into the D1 chart right now. This is the US 20-year Treasury. When bonds fall, interest rates are rising. And you can see how it fell below the two major moving averages, the 100-day and the 200-day moving average, not able to get back above the 100-day. Now we are back below that 200-day and spending time below the 200-day. This is going to be a headwind for the market. Market does not like higher interest rates, and we know that the Fed may be talking about tapering, and they may start tapering as soon as November. Well, that meeting is coming up on November 2nd, just a couple of weeks away. So this is a headwind for the market. It's something that we need to keep an eye on. Typically, you're not going to see a huge market sell-off just because bonds are pulling back. How do you know that, Pete? Well, because I'm going to put up a chart of the S&P 500 and then I'm going to overlay the TLT and we'll be able to see what's typically happened. Let's zoom out on this very quickly here. And you can see here we've got bonds selling off hard. What does the market do? It starts to pause in here when we get this big leg lower in here because it's a market headwind. So now we had bonds stalling, but the market was able to creep higher. Now that we're seeing bonds pull back, guess what? Getting a little bit of a pullback, but the market is grinding higher here just recently heading into earnings season because there's a lot of optimism and some of this shock, the shock that interest rates are heading higher, is starting to wear off a little bit. We won't really see that heavier selling until the Fed starts to outline how aggressively they're going to taper, and everyone's going to be looking for when they might possibly tighten. Goldman Sachs came out and said they don't see any Fed tightening in 2022. So 2023 would be the first time. So as long as that bias or that opinion is out there, probably not going to see a huge market decline simply based on interest rates. So it's something we need to keep an eye on. It is a headwind. It probably is going to mean that the all-time high is going to be challenged, and we're starting to see some selling pressure. We know that some of these gaps in here are likely to fill as well. Maybe we get back to the 50-day moving average on a little bit of a retracement. We saw earnings from Netflix, stock down. We saw earnings from Tesla, stock down. Both cases, earnings were exceptional. What the heck is that all about, Pete? My gosh. Stock has fantastic earnings and it's down after the number beats expectations handily. How does that happen? It's priced into the stock already. So even though you post gangbuster numbers, it's expected. So let's see how the big five report earnings. They're going to be reporting earnings over the course of the next week or so, a lot of them next week. So we'll need to keep an eye on it. In general, I love this price action. And let's take off that overlay. We don't really need it anymore, and it just obscures our view of the chart. So let's take a look at what we've got again. We've got that downward sloping trend line. We got the 50-day moving average lending support. If the market pulls back, it may fill in this gap or this gap. We got the futures down about 12 points right now in the overnight session. Good. We want a pullback. Just like the video that I sent out Sunday night where we got into Home Depot, we sold a really nice out of the money bullish put spread. We were able to get in when the market was pulling back early in the day, and it was on this bar right here. That was a beautiful entry for us, and the stock rallied like mad the rest of the day. We're all the way down here at the 345 strike. Lots of breathing room. We took advantage of that lower open on Monday. We got a lower open today. Let's find a couple of stocks that we might be able to use the same strategy on. You can see here, buy into earnings. This is our list. I use this a little bit more for day trading and very short term bullish put spreads that might expire in a few days. And you can see how you've got a big list, but you don't have a lot of flexibility for swing trades. I'm going to look for something that we can put on and leave on for perhaps a couple of weeks, maybe 3 weeks or so. And so I need to go out farther than this 2 week window because some of these companies will announce in the next few days. Some of them will announce, let's say maybe Tuesday or Wednesday next week. That doesn't give me any expiration that I can sell, put premium on, because I want to make sure that those options expire before the earnings announcement date. Let me repeat that because it is super, super important. We want these bullish put spreads to expire before the earnings announcement date. We do not hold positions over earnings announcements. And you're not going to see any kind of time premium decay in options that span that earnings announcement date because they're going to be full of juice, full of implied volatility. So you must make sure that the options expire before the earnings announcement date. Very easy to find. Hover over the E and you can see what the next earnings announcement date is in Option Stalker. So let's run a search. Let's go into our custom search and I'll show you how I set this one up. Let's bring it into view. And you can see that one of the keys is, yes, I want to make sure I've got weekly options. So I'm going to mark that box in custom search and pre-earnings bull. These are all the stocks that have a tendency to rally into the earnings announcement date once they get in that 2 week window. So we want to go out just a little bit further and we want to look for stocks that will announce earnings after November 1st and before November 26th. Those are just dates that I selected. It gives us about 3 weeks, plenty of candidates. It also gives us at least one options expiration date a week from this Friday to sell. So I at least want to go out to November 1st and let's see what we returned. So I did that and I went through these and there are a couple of them that are interesting and I marked strong versus the S&P 500 and compression in. I also want good option liquidity. Why would I select compression in? How does that make sense? Pete, don't you want stocks that are moving higher? In general, yes, but for this particular strategy, I want to see a stock that's relatively quiet right now, that hasn't made a gigantic move, and I know that that support should hold because the stock has a tendency to inch its way higher into that earnings announcement date. I'm going to be relying on that. I don't need the stock to move higher. It can move a little bit lower or it can go gangbusters to the upside. In all those scenarios, I will make money with an out of the money bullish put spread that I'm selling. So as I took a look at the list, I really like APPS. And you can see beautiful breakout right here on that $80 price point. That is where I would be looking to sell an out of the money bullish put spread. The stock is at $87. Okay. Got a nice upward sloping trend line here. Got a nice upward sloping trend line here. We've cleared all the major moving averages. Beautiful breakout, excellent follow through, decent volume. Yeah, I like that 80 strike. So how would I approach this trade? Well, we know that the market is down this morning and hopefully we'll get a little bit of a pullback in the market because that'll give us a little bit of a pullback in the underlying stock and then we'll be looking to sell that 80 put, perhaps buy the $79 put. So do an 80-79 bullish put spread. I'm always looking to get a credit of 20 cents on those $1 wide spreads because I have to put up $1 in margin, but I get to use the 20-cent credit as an offset. So I have to put up 80 cents to make 20. 20 cents divided by 80 is a 25% return if that spread is successful. That's just personally what I want minimally to make on these. So you can see November 4th is the earnings announcement date. So I have to pick an expiration date before November 4th. Go into my option pricing here. I'm going to go in, take a look at what dates I have available. So the 5th is an expiration. The 29th is what I have to go for. And so because I'm looking at that 80-79, you can see 65 by 60 bid ask. I can get a nickel, but it's a nickel bid offered at 25 cents. Pretty wide market on that. If the stock pulls back, might I be able to get that 20-cent credit? Yes, I might be able to get that. Keep an eye on the market. We want to see how far down it goes. If you see long red candles stacked this morning on the open consecutively with very little overlap, you want to be patient, patient, patient. Wait for that market support. Once you find that market support, you want to make sure that APPS, yes, it's probably going to pull back with the market initially. That's what's going to give us our opportunity to get into the trade at our credit. But then eventually, as the market continues to slip lower, you want to see that stock find some support. So a lot of information I just threw at you. You want to see the stock pull back a little bit. You can see it's got long tails above and below, so it does move around. But eventually, you want to see this stock find relative strength. Orange line above zero today. You want that line clearly above zero, just like that. When you start seeing that, then you know the stock is finding support, even though the market may be heading lower. So that's your first trade, APPS, using the October 29th expiration. I like selling the 80.79 bullish put spread for a 20-cent credit. That's the premise that we're going to use for some of the other stocks that we're going to take a look at. I like APPS. I'm going to show you one. These are all actually pretty decent candidates, but some of the stocks are a little bit too strong. This is a little bit riskier play because I don't typically like to take bullish positions on a weak stock like this. But DKNG, DraftKings, we're in the NFL season. You can see 1, 2, 3 lines of support. Stock is compressing down here. Let's take a look at that E. Same thing. November 5th is the earnings announcement date. November 5th is an options expiration date. So we have to go to the October 29th expiration. And here you want to make sure that that support level is held when the market comes in today. It's okay if the stock comes down and tests it, but you want to see relative strength through the course of the day. Then you might be able to go down and sell a 45.44 bullish put spread. Again, I'd like to get about a 20-cent credit. Could you go a little bit closer? This is about $47. Yeah, you could, but it gets a little bit riskier. I'd rather go down to maybe the $46 and do a 46.45. Again, this is not my favorite kind of setup, but you can see that the stock clearly has some pretty decent support in here. Keep an eye on it. See if it gains its relative strength. If it holds up well and you get an opportunity to sell it, it could work out pretty well. I'm going to go in and let's run another search here. So I'm going to look for compression in, but not necessarily strength versus the S&P, and see what else we pull up. And when I run this search, you can see there are a number of candidates, but again, mind you, I don't have that strength versus the S&P to lean on right now. One that I saw that I liked was NVIDIA. And we can take a look here. You can see a downward sloping trend line. Has to get through that on the upside before I would day trade it on the bullish side. That's why I have my alerts set right here. Off the 100-day moving average, very nice little grind higher with the market above that 50-day moving average, so I like it. This stock tends to carry a lot of option implied volatility, a lot of premium. Premiums are very rich. Hover over that E. November 18th. So I've got a few expirations that I can choose from. Go into option pricing, scroll down, and we're going to go into 18th was the expiration, or excuse me, 18th was the earnings announcement date. So I'm going to go to November 12th, and we're going to go down to the 195 strike price because I see a lot of support there. And 195, 190, you can see it's 21-cent bid offered at 30 cents. So very wide market, 30 cents ask. I need to get $1 for that. So the 95.90, I would do that spread for $1. This stock, pretty volatile. We'd probably need it to pull back and test the 215 level. That's the 50-day moving average. We want to see that hold. We want to see some nice relative strength in the stock. So watch the market this morning. I don't think we're going to see a bloodbath today. I do think that bonds moving lower are going to weigh on the market a little bit, and we've got a lot of gaps higher. So I'm going to just review this trade one more time. I like selling the 195 puts all the way down here below that 100-day moving average. So I've got support at the 50-day, support at the 100-day, horizontal support here. Could you pick strike prices up here knowing that NVIDIA has a tendency to rally into earnings? Yes, you could. You'll also want to keep an eye out for AMD because they announced earnings before that, but these two stocks do move independently of each other. I like that 195. That gives me lots of cushion down there. So 195, 190, if you can get $1 for that in the next day or two, I think that plays really well also. So let's take a look at the market one more time because everything starts with the market. What are the formations that I do not want to see today? I do not want to see a lot of red candles stacked on the open, because that would tell me that the selling pressure is accelerating. I've already shown you earlier in this video how I'm starting to see signs of selling pressure at the high. So I'm going to scroll back and I'm going to show you the type of selling pressure on the open today that you want to avoid. You want to let this type of selling run its course, because when you get these long red candles stacked, it means that it's going to take a while for support to form. Not the best example, long red candle closing on its low. Long red candle closing on its low. Long red candle closing on its low. Very little overlap between these, stacked consecutively. This is a warning sign. This is a sign of heavy selling pressure. Geez, Pete, you're scaring me. If I got heavy selling pressure, what do I want to be selling bullish put spreads for? Because this will eventually establish support, but this is a process. When you see these long red candles, you don't have to hurry, you don't have to do anything. Make sure the lows are in. Market bounces, comes back, doesn't even get back down to the low, makes a higher low, double bottom. This is when you can come in and start looking to sell some out of the money bullish put spreads, because now you have a double bottom, higher low, and you know that support is in. You want to avoid situations like this where you compress and then have another leg lower. And this series of red candles lasted a whole lot longer than the one that I just showed you. This is about a 2-hour span of heavy selling. This was about an hour's worth of heavy selling that eventually found support right in here. So look for support after maybe an hour of selling. Watch out for these long red candles. If you get kind of a mix of choppy candles on the way down, you don't have to worry about that as much, because when you start getting mixed green and red candles, that is a sign that support is forming. Like here, you get this drop, and then now all of a sudden you start mixing in green and red candles. That tells you that buyers are engaged and that you're not going to free fall. I'm not looking for a free fall here. I'm looking for a little bit of a pullback on the open. I'm looking for an opportunity to sell out of the money bullish put spreads on strong companies, good stocks, companies that have a tendency to rally into the earnings announcement. The stock can stay flat. Stock can move a little bit lower. Stock can move a little higher. Stock can move up like crazy. In all of those scenarios, I make money. I just have to avoid a market bloodbath, and I have to avoid a big drop in the stock. I've shown you all the reasons that I like these companies. Very high probability trades. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.